First, what NFTs really are. In simple terms, an NFT is a digital proof of ownership stored on a blockchain, usually Ethereum. It can represent digital art, music, videos, game items, virtual land, or even access to exclusive communities. The key word is ownership. Anyone can see a JPEG online, but only one wallet officially owns the NFT linked to it. That ownership is public, verifiable, and transferable without a middleman. Now let's talk about why NFTs exploded in popularity, especially in the US. Between 2020 and 2022, NFTs became popular because people saw massive success stories. Some NFTs bought for a few $100s were later sold for thousands or even millions. Celebrities, athletes, and big brands jumped in, which created excitement and FOMO, fear of missing out. Many investors didn't fully understand NFTs, they just saw fast profits and rushed in. But here's the important truth. The NFT market has matured. Today NFTs are no longer about easy money. Many collections that were once hyped are now nearly worthless. This doesn't mean NFTs are dead, it means the market has shifted from speculation to utility and long-term value. Just like the dot-com era, most projects failed, but a few strong ones survived and evolved. So the big question, are NFTs still worth investing in? The honest answer is yes for some people, and no for most beginners. NFTs are high-risk investments, even riskier than crypto. Unlike stocks, NFTs don't generate cash flow. Their value depends on demand, community strength, usefulness, and long-term relevance. Let's talk about when NFTs might be worth considering. NFTs can make sense if the project has real utility, not just art. For example, NFTs tied to games, membership access, event tickets, brand loyalty programs, or intellectual property rights have stronger fundamentals. Some NFTs also act like digital memberships, giving holders exclusive benefits, future rewards, or revenue sharing. These types have a better chance of surviving long-term. On the other hand, pure art NFTs are extremely risky. Art NFTs rely almost entirely on hype, artist reputation, and trends. Unless you deeply understand digital art markets or are buying because you love the art itself, investing in art NFTs purely for profit is closer to gambling than investing. Now let's talk about the biggest risks, especially for us investors. First, liquidity risk. NFTs are hard to sell. Just because someone lists an NFT for $10,000 doesn't mean anyone will buy it. Second, scams and rug pulls are common. Some creators disappear after selling out a collection. Third, regulatory uncertainty. US tax rules treat NFTs as property, meaning capital gains taxes apply, and rules may evolve further. Many investors forget taxes and end up with unexpected IRS issues. Another major risk is emotional investing. NFT markets move on hype, Twitter trends, and influencers. Prices can spike overnight and crash just as fast. If you can't handle extreme volatility or you panic sell, NFTs are not for you. This is not like buying an S&P 500 index fund and holding calmly. So how should beginners approach NFTs, if at all? First rule, never invest money you can't afford to lose. NFTs should never be your main investment. For most US investors, traditional assets like stocks, ETFs, retirement accounts, and real estate should come first. NFTs, if used at all, should be a small speculative portion, like entertainment money with upside potential. If you still want to explore NFTs, think like a collector, not a trader. Ask yourself, do I understand this project? Do I believe this community will exist in 5 years? Does this NFT offer real-world or digital benefits? Would I still be okay owning this even if I couldn't sell it? If the answer is no, don't buy it. Let's also talk about taxes in the US, because this is critical. Selling an NFT for a profit is a taxable event. You may owe short-term or long-term capital gains tax, depending on how long you held it. Even swapping one NFT for another or using crypto to buy an NFT can trigger taxes. If you don't track transactions properly, things can get messy very fast. So here's the final verdict, clearly and honestly. NFTs are not a reliable investment for most people. They are speculative, volatile, and unpredictable. However, for experienced investors who understand blockchain, digital ownership, and emerging tech and who treat NFTs as a high-risk side bet, there can still be opportunities. If you're a US-based beginner, the smartest move is this. Build your financial foundation first: emergency fund, retirement accounts, diversified investments. Only after that, if you're curious and financially stable, explore NFTs slowly and cautiously. Think of NFTs not as a digital experiment. Some will fail, some will survive, and a very few may change how ownership works in the future. The key is knowing the difference between investing with strategy and buying hype.